There is no way out of this mess, that's for sure. Markets are wild. The real economy is weak. Tensions are high. Yet the mainstream media and the propaganda they force feed the public is never ending. I guess there's nothing really new about that. What's different about 2019 than 2017 and previous years is that this is a contraction phase. 2018 was a warning to investors about what drying up liquidity brings, and it's only a matter of time before something snaps. You came here for the truth, so let me unveil that for you. Today we're going to look at several real factors. When it presents itself into the real economy, that's when we can point to it and make a defined understanding of exactly what's going on. If you're looking at charts, if you're looking at statistics, sometimes it doesn't make sense. But when you start to piece everything together, that's when the bigger picture is drawn for you. So let's begin by taking a look at this. I see no way out. Living paycheck to paycheck is disturbingly common. This article basically goes through a series of different individuals and the topics all related to individuals that cannot keep up with their expenses. It's a matter of fact. No matter where you are looking in the United States, Canada, areas of Europe, in Asia, and basically everywhere today, the cost of living is too high. That's because individuals don't get paid enough. And by increasing the minimum wage, you're going to fix the problem. No, wait a minute. It's universal basic income. That's the problem, right? No. What we need today is to realize the underlying problem, and that is central banks. Central banks have caused this dislocation in between reality and what you are seeing. When you look at the central banks and what they do, they devalue the currency every single day. They make it impossible for you to save money. They have decided that this is the way to go, and so you have problems that pop up all over the place. And every time there is a contraction, things get worse in the end. We'll talk more about that in a second. US home affordability drops to more than 10-year low in the fourth quarter of 2018. Where you see all these dots, this is by Atom, by the way, ATTOM, some of the best data you're going to find. You can see the blue dots, home prices outpacing wages, and the orange dots, wages outpacing home prices. And you'll notice something very clear. There's a lot more blue dots than there are orange dots. And even when the orange dots are, if you look into the real numbers, I'm sure you're going to get a different picture. But even going by this, you're going to make the obvious realization that many people today are spending way too much on their homes. It's a matter of fact. They have to go further and further into debt. That previous article was talking about individuals that every single month just go further and further into the ground. And why? They're not living lavish lifestyles based on the information provided, of course. Who knows what they're doing? But basically, they're buying regular things. They're not going out there and buying Lamborghinis and living in mansions. They are paying for their everyday expenses, and it's just getting more and more expensive to live a normal lifestyle. And that goes for real estate, that goes for buying and renting, of course, that is car payments, that's insurance, that's electricity, and every other factor. But what do? The government comes in and tries to apply more taxation on the public as somehow becoming a resolution for the problem of too many expenses. It's ludicrous behavior, and of course it never works. The root cause of the problem is central banks. Retirees are worrying about their nest eggs as this month's sell-off rounds out the worst year for stocks in a decade, and some fear they are headed for a day of reckoning like the 2008 market meltdown or the dot-com crash of the early 2000s. Retirees have less time to recover from a bad investment move that the younger workers have. If they or their advisors panic and sell during a brief downturn, they may lock in a more meager retirement, but their portfolio could even be more at risk if they hold on for too long in a prolonged decline. Think about it. If we have an issue that happened, let's say after 1929, the markets did not return to their previous high up until something like 1954. It took a long time to get back to there. And when you look at inflation on top of this, you've got a big problem. Look at the NASDAQ. It took, I think, 14 years to get back to its previous high. You need to understand what could happen to you and your portfolio. If you're 25, maybe it doesn't make too much of a big deal, but you need to be smart about this. You need to be ahead of the game, and most people simply are not. They feel that they put the money in, invest for the long term. They don't understand. They do not want to work harder at it, and they do not want to connect the dots. That's too much work. Just let it ride. Speaking of which, I have no way of riding it out if that happens, this individual said. I can feel the anxiety in my stomach all the time. Now they're talking about 401ks and retirement plans here, and basically you have no control. The average person has no control of what happens with their finances, and that's sad. It's done that way on purpose. They have created these avenues not to benefit you, but to benefit the corporations. It's very silly when people are handed these investments and they think this is an excellent opportunity. I can save for my retirement. This is so wonderful. But they don't realize who actually benefits from it. The fees that are taken from you that are actually hidden into their funds, and people have no idea. They think the rate that they see for the management expense ratio is the actual fees that they pay, and it is a little bit silly. It's kind of childish. It's like you have to open the book and say once upon a time, or else people don't get it. They simply don't look into the details. They see what's on the first page there and they move on. And it's quite sad to me as an individual who really tries hard to look into the deeper levels. Every single day you need to dig, and you're gonna get probably about 1% of the way into it, but that's 1,000 times greater than what the general public knows. This article here is basically talking about Baltimore and the exodus that is going on right now. In the third paragraph, the quote is, "It's like we're a forgotten population." Truly sad what's happening here to these individuals who have businesses here, who are working here, who have families here, and it's just going to get worse. We know that. That is a fact. So I would be paying close attention to seeing where the population is moving out of and trying to be able to connect the dots on all of that information. It's not looking good for areas like Baltimore. Even the state of Illinois is just completely seeing mass exodus right now. New York is suffering in some ways simply because of the expenses being too high. The taxation is ludicrous today. And what is the government doing? Nothing to fix the problem, of course. They don't want to do that. They apply more taxation and they try to make things more difficult. As a result, the problem only gets worse, as expected. We keep hearing this falsehood about how well the economy is doing, about all of these jobs, about all of the success that businesses have today. Look at this article out of the Wall Street Journal. U.S. companies are so inundated with inventory that some are renting truck trailers to use for storage space, parking them on warehouse lots or behind storefronts to hold goods until a surge in imports is cleared from crowded distribution hubs. I do not see this as beneficial in any way. You see, these businesses are producing all of this inventory with the thought that someone's gonna buy it. But as the economy slows down, they're going to be left with bigger and bigger piles of inventory. This goes for everything from commodities to retail products. That's the way it happens. Yes, you can keep the engines going, just like when you build empty cities, like a certain country that some people get offended about when I talk about it. Completely empty cities get built. You have towers, you have streets, you have infrastructure being completely built. Nobody's in it. Yes, the businesses are going. They are moving. Commodities are being imported. The businesses are in fact hiring people, but at what cost? How long can you do this for without it biting you in the behind? You need real investment. You need people spending, you need people buying, you need businesses doing what they do on a natural level. You can't force it, or else it's eventually going to hit much harder than it would initially. And the dislocations and distortions are getting completely out of whack right now. This article out of CNBC is basically talking about these companies companies that are rushing to have their IPOs because they know what's going to happen in 2019 and beyond. So they're trying to get public as fast as possible, make sure they can get a good price for that pump and dump if they need to, and ensure that they are doing this before the worst of the worst occurs. That's basically what it says in here. So I'll move on. BlackRock Capital Group and PIMCO managers warn of 2019 risks. This article goes through a different set of risks talked about by these big individuals. There's a lot of details in it. I'll read you just this quickly. US stocks are looking scary after their worst year in a decade. Credit is risky too. Volatility is back. For many, cash and short-term debt may be the best place to go, as fund company executives, portfolio managers, and strategists are some of the world's biggest managers are turning to 2019. They're cautioning that returns could be muted across asset classes, and it goes on. Then you hear what they have to say themselves. They were talking about the risks, the things that we usually discuss on this channel, so I won't bore you with the details. Let me move on to the last and most important of all. If you stay till the end, you get the juicy details. China to take over Kenya's main port over unpaid huge Chinese loan. This is what I see occurring all around the world. This happened in Greece on a major scale. Essentially what we have are assets being sold off to different countries, to different investors, to private individuals who will be able to take advantage of the situation. Debt is a problem because then you are subject to the losses. Look, if you think that Kenya is the one that's winning out of this because they didn't pay that debt off, clearly you don't understand. That's where the fools lie. This could apply on any level. What we have today are major events taking place in which there will be deflation, in which there will be losses, there will be debt, and there will have to be austerity in order to, quote, fix. This is not going to work, of course, but what it does do is transfer wealth and assets from where it currently is, from your hands, from my hands, from the country's hands, the nation, and moves it off into the central banks, the big investors, the multinational conglomerates, the supranational entities, and so on. They are going to win, and it's going to be hilarious to see the public begging and pleading the central bankers and the Warren Buffetts of the world to bail out all of the institutions, the economy, for pennies on the dollar. They're going to win, we're going to lose, and this is all part of the grand plan. I have been breaking this down for years and years, and it doesn't happen overnight. It's a slow and steady process, inch by inch, the tiptoe effect as they describe. That's what's occurring, and I hope you have seen it with me here. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. You just have to click that one button to support me. I hope that you will also become a subscriber if you're not already. We are going towards 200,000 subscribers on this channel. Hopefully in the next few months we'll be able to get there, and hopefully you will be one of those people. So I'd like to see you there. Let me know your thoughts in the comments. Of course, I always love to hear from my subscribers. Great to hear from such educated and informed people. Last but not least, if you want the financial education that was not taught to you in school, that was kept from you on purpose, these two books have everything you need, from the foundation, the history, the asset classes, how to make money, and so much more. Check them out at the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.